The rupee has continued to weaken despite the RBI intervention. The rupee is not at an all-time low, but it's still trading below the $82.8 per mark. So this is the big story we're tracking. The rupee is weakened by about 5 paise today. India's forex reserves are down by $100 billion this year. This is the sharpest annual fall in forex reserves in a year. Markets, however, have gained for the 6th straight day. Sensex and Nifty both up this morning. And both markets, both indices, in fact, trading 0.4% up in the green. Let's go across to NDTV's Priyanshi, who joins us with the very latest. So, Priyanshi, the rupee, of course, continues to weaken. This isn't an all-time low that we've seen, but the rupee continues to weaken, but the markets seem to have recovered slightly.
That's right, Rishika. The rupee has weakened by 5 paise today. Yesterday, it closed at around 82.75 per dollar. But today, the rupee is trading at around 82.83 per dollar. So it has weakened from that level over 5 to 6 paise just today. Now, this is not a record low, as you mentioned, and it's important to point that out. Yesterday, the rupee closed, as I said, at 82.75, which was also not a record low. But yesterday, the rupee hit an all-time low in intraday trade at 83.3 per dollar. Day before yesterday, rupee closed at an all-time low of 83.02. Even though today it has not weakened to the record low level, it is still following that trend. And experts say that if this same trend continues, rupee could equal 85 to the dollar by the end of this year, just by December in the coming 2 months. Why are experts saying this? Because in the last 10 months, rupee has weakened by 9 paise. In the month of January, rupee was at around 74 to the dollar, and now it's close to 83 to the dollar. So 9 rupees of our currency, the value has been lost in just a matter of 10 months. That's why experts are saying that if in 10 months 9 rupees have been lost, in the coming 2 months 2 more rupees could be lost, and rupee could be trading at around 85 by the month of December. Now, if we tell you what all is the Reserve Bank doing to save this, well, for that it's important to first understand why is the rupee really weakening. Rupee is weakening because the demand for the dollar is going up. When there are fears of a global recession, investors want to keep their money parked in considerably safe currencies such as the dollar. So that's why they take out money from rupee-based currencies and other emerging market currencies, and they keep it in dollars. So that's why the demand for the dollar is increasing. Now, whenever the demand for a product increases, the price also increases. That's why the rate of the dollar is increasing and the rate of the rupee in comparison is falling. So that is why the Reserve Bank of India is really selling dollars so that there's enough supply of the dollars to bring down the rate of the dollars in the currency market. This has cost India close to $100 billion in just a matter of last 10 months. Since January to now, the Reserve Bank of India has sold $100 billion of forex reserves of India, and our forex reserves are down by 15% from January to now. So that is a huge cost that India is bearing for the falling rupee, and even then the rupee slump does not seem to be controlled even after the RBI's intervention. Now, after the RBI's intervention from January to now, it's important to also note that this forex reserve sale is the highest that we've seen in any month on record. The Reserve Bank of India records from late 1990s to now show that the 100 billion sale that has happened this year is the sharpest fall in our forex reserves that we've seen in any year. So that's also a major cost that the Indian forex reserves are bearing because of the falling rupee. But if you also come to the markets now, the markets have gained close to 0.4% today. Sensex and Nifty both are up, and both have gained for the 6th straight session. Why is this happening? Well, strong Q2 earnings by major corporates and also lower oil prices are both helping market sentiment ahead of the Diwali season. Remember, the oil prices are currently trading at around $92 per barrel, which is close to the pre-war levels. So all of these reasons are helping the market sentiment, and the markets have gained for the 6th straight session.